Mortgage rates dropped again this week. Thanks to falling Treasury yields and plunging oil prices, it's a good time for consumers to get a mortgage. But what will this mean for the housing market in 2015? Real estate attorney and writer of the book, Finding the Uncommon Deal, Adam Leitman Bailey, joins us to discuss. Adam, welcome back to the show. Great to have you here. Me. So, I'm amazed that these rates are staying this low this long. How come? What's going on?
Well, it is fantastic news because the lower the rates are, the more money you have to go shopping with to buy a home.
Right.
So we love it, those in real estate. But why is it happening? Russia, shakiness. China, we don't know what's going on. Europe, shakiness. You got wars we don't understand, all making America's security safe.
So it makes us look like the prettiest horse in the glue factory. People are happy to invest here in the States.
We're a unicorn.
They drive down these interest rates in this market. But I don't think anybody thought that we would be at these levels now. Most people were predicting, at least the experts on interest rates were projecting that they would be higher at this time. What do you think is the outlook for next year? What are the people in your industry, real estate, saying about next year? Will we remain under 4%? Will it be higher?
I don't know exactly what the interest rates will be, but this can't be more fantastic news for the start of 2015. Why? Because you have more money to go shopping with to buy a home, number one.
Right.
Number two, you now could buy a home and get a loan from a bank by putting 3% down. So the lowest interest rates you've ever seen in years, and 3% down, and now you could have a jumbo mortgage, meaning you could take on 2 mortgages instead of just 1. The government's doing everything they can.
Well, they are throwing possibly too much at the wall, right? Because they're offering 3% mortgages now, and we've seen this movie before. We know what happens when you offer rates that are too low. Everybody gets into the marketplace, some people who can't even afford homes.
Well, the big thing in my office now, we do thousands of closings a year, and the big news is people are refinancing. That's the biggest thing, right? Refinancing, because rates dropped. But they're refinancing to cash out, meaning they're taking money out of their homes. That's the same
we're back
danger.
To that.
Right, that's
We're
dangerous.
back to that. So that's an old trick from like 2005, 2006,
yes,
where you tap your equity and you use it to pay down credit card debt or college loans or whatever.
Exactly.
So we're back to the same old things. I want to show folks, though, mortgage applications are actually down in the past week, which is surprising. Does that have something to do with a holiday, or why would that be?
No, the market's been pretty much frozen since February. Less people are buying houses. Why? Well, there's very little inventory. There's less. When you go shopping for a home, our clients are having trouble buying. They can't find homes that are affordable. First of all, there's less homes out there. The people that are selling don't realize that the prices have dropped, so they're keeping their prices high. And then that, with higher interest rates, even 6 months ago, kept people on the sidelines.
It's a fascinating market. We're going to be watching it next year. We hope you come back. Adam Leitman Bailey, thank you.
Thank you very much.